Hi there, welcome to Neppy Invests. Exciting times here in the Neppy Invest office as I have a Blue Yeti microphone I'm just looking at, just got it now. So hopefully everything goes well, and I'm also using Logitech webcam instead of my Nikon DSL camera. So hopefully everything goes smoothly. So today, very exciting month. I love October. It's one of my four favorite months of the year, including January, April, July, and of course October. So if you know the link between those 4 months, I think we'll get along just fine. So the link is, for those who don't know, is that's when the Appendix 4C or quarterly cash flow reports are due for certain companies on the ASX. And I prefer the quarterly cash flow reports over the annual report or the half-yearly reports, because most of the smaller companies, the potentially higher growing companies, need to produce their quarterly report, and it's just more exciting. Those companies are more fun, more exciting, more potential there. So all the 15 ASX stocks I'm going to be going through over a slew of videos. So I'm not going to do more than one video. I'm going to do 5 lots, 3 companies each. All will be issuing Appendix 4C this month. So typically with the Appendix 4C, they come in a trickle initially, but then by the end of the month, they all come in a flood. And by the last day of October, they all should come in. The majority of them will come in on that day. So let's go through them. So the 3 ASX companies I'll be looking at today are Etherstack, the code there is ESK, Impay, the code there is IMS, and LiveTiles, LVT. Won't go into a deep dive in any of these companies. I'll just go through a quick overview, why I'm looking at them, why I might be excited about them, and that's about it. I might end up doing a more in-depth analysis on these companies or some of these companies later in the month, especially if they come through with their Appendix 4C and I like it quite a bit. That's when I might dig a little bit deeper. I won't necessarily buy straight away if they have a favourable Appendix 4C, but I found in the past that jumping in on the day they do release a very good Appendix 4C quality cash flow is quite bullish, and you can get a fair bit out of it. So let's go through the first company. First company is actually IMS. It's probably, I won't say it's the biggest dog stock of the lot, but a lot of times a dog stock has the most potential upturn because it's been beaten down so much. So IMS is a digital customer generation company. It's changed its brand, it's changed its name over the last 4 or 5 years. You can just see on the left-hand side, upper left-hand side, I've got the cash receipts over the last 3 quarters. They weren't doing quarterly cash flow reports until this year, and you can just see it going down. But I'll get into a little bit of history in a minute. But they have 183 million shares on issue. Their price is beaten down. It's less than a cent, market cap of 4 million. They do have $9.4 million in revenue and positive cash flow, but that enterprise value 10.2, which just means they do have a fair bit of debt. And typically I don't like to see debt if they don't have much of an operating cash flow. So I like to see that increasing operating cash flow. So this company is at probably the most risk of going under if they can't improve that operating cash flow and negative equity there. So IMS, about 4 years ago, so I got a fairly busy chart. I'll slide this one. So I got a chart there. About 4 years ago, they were named Mobile Embrace. I think it was Mobile Embrace. MBE. They had revenue of 60 million, a market cap of 130 million. So they were a direct carrier billing company. I just Googled direct carrier billing company just before I did this video, and the first thing that popped up was Vodafone was needing to compensate about their wrong or bad direct billing procedures or whatever it is, and that just shows you there was a lot of bad news about what Mobile Embrace were doing, a lot of the business they lost, and so they had to rebrand and started doing something else. So there's a quote from Simply Wall Street introducing Impay, the stock that collapsed 98%. So it went from a share price of $40 near the high all the way to less than 1 cent. And in the bottom there, I've got, this is from the annual report they released today, the 1st of October. And they're very honest, very forthright. Brendan Berthistle, who has a lot of money in this, I like what he does. His wording, he's very honest, forthright. I like I like that sort of strategy. So that's one of the reasons I'm interested, just because Brendan Berthissel has a lot of money in this, a lot of stock, and he is giving the company a fair bit of money. But you can just see that over the last 5 years, the revenue has gone from 60 million to 9 million. EBITDA has just went off a cliff. Profits gone down. In fact, they lost a lot of money because of write-downs in the share price in 30th of June 2016. So it's gone from 30.5 to 0.5 cents. So a lot of shareholder destruction if you've held out for that long. But a company like this, you can just see on the top right, the last cash flow report, they actually were positive cash flow. They did have positive cash flow of 198,000. They did have some government grants there that did prop it up. But I'm going to be waiting for the next one. If they do see some traction in their receipts, so the first thing I look at is receipts. I do see that starting to increase, increasing operating cash flow. I'll be more interested in this company. I might, in fact, buy a small stake in this company because I think they've been down so much. The share price is starting to level off. It's starting to level off at about 0.5 cents. Starting to set a bit of a sort of a resistance level or support level right there. So there is potential here. And if this company's management does pull it off, this is a potential massive multi-bagger. We're talking about 10 to 20 times multi-bag. So even if they go at 10 times multi-bag, it's only a market cap of 40 million. It's already been a market cap of $130 million in the past. I've seen this a lot. Companies have gone through this, and it wouldn't take much for them to get a 40 million cap. So this is definite high risk. So a lot of risk in this company. It wouldn't surprise me to see this just go bankrupt, lose everything. But there's also that possibility it might be a 10-bagger. And when you think the downside is 100%, the upside is potentially 1,000%, 2,000%. So when you think of the upside, a lot of upside there. Next company is Etherstack, ESK. A lot of excitement in this stock a few months ago, I forget where. So they are a wireless technology company. You can see there on the right-hand side this is their own definition of what they do. Cash receipts on the top left, so it's they haven't got much history there, but we can just see increasing from 912 to 2.2 million. So we have a good uptrend there. Shares on issue, not a lot there. Market cap of 77 million. They do have $8 million in revenue. Operating cash flow 2.6 million. That's pretty impressive, and I like that. Enterprise value of 78 million, so they are fairly high up there, and unfortunately negative equity. So the fact that they're increasing cash flow, I like to see one, maybe more quarter of cash flow. And there's one thing that does concern me. I'll just show you that on the next slide. Not much trading in this stock up until the end of June, where we saw the share price increase on news of 1,358% on 30th of June. Just imagine the day before that you sold at 12 cents. So you can see the share price, there's 95,000 shares sold and you sold at 12 cents. The next day, the share price went up to $2. Bad day to sell, bad timing. But you can just see after that, share price next day, after it went up 1,358, it went down 40%, then the next day it went up 20%, next day it went down 27%, next day it went down 13%. So at that point, you never buy in. I never buy in on that news because there's too much volatility. Day traders might come in, but we're seeing a gentle downtrend in the share price. Another good bit of news with another good quarterly. You can see on the top right-hand side, we had the last quarterly. They did have positive cash flow of 1.4 million American dollars. That's pretty good cash flow. If you times that by 4, that's $5 million in positive cash flow in a year. That's actually means this company's pretty well off, doing fairly well. Not a lot of spending there, so margins are pretty good. And in the actually chart, I've actually put there, if you want to read it, why that share price went up 1,358%. It was based off some sort of agreement with Samsung, but that sort of agreement, you never buy in on that sort of news. It always leads to tears. Always leads to tears. That sort of price action. So the next company is LiveTiles. So LiveTiles is just an intranet platform that helps employees connect with their workplace technologies. I don't know much about this company. I've been following it a little bit just because on the left-hand side, instead of putting a sort of a table, I've just got a graph of their cash receipts. You can see it's increasing really well. The biggest problem with this company has been they're just burning through cash so quickly. They're just spending a lot of money on, I think it's employees and marketing, that sort of thing. So they're losing a lot of cash. They had to do a lot of capital raisings. So shares on issue right now, 902 million. Market cap is 176 million. $38 million in revenue. That's 110% growth. So a lot of growth there. Operating cash flow, just see that it's negative 9.2, so burning through a lot of cash. Enterprise value, 138 million. So a lot of, I think it's cheap when you look at the annual recurring revenue of 58.2, although I've got their brackets 53.8, and I believe they did some funny things with the ARR. They use a constant currency basis to sort of inflate the number, so it's 58.2, when they probably should have used 53.8, which means the ARR actually went down in a quarter. So that maybe has to do with the COVID-19, we'll wait and see. But it does seem an interesting business because improving their sort of the internet platform and helping employees connect with workplace technologies, with increasing working at home, that might have something to do with it. I'm not sure because I'm not the biggest, don't have the biggest knowledge of this company. Probably will do a little bit more research on this company just because the share price has gone down, as you'll see in the next chart or the next slide. So share price was as high as 70 cents back in July 2018. We've seen a bit of a downtrend since then, at about 20 cents now. So actually, when you look at the AR and compare that to the market cap, it's actually quite attractive based off only 3 times EV to the less than 3 times from the EV to compared to the ARR. So beaten down, and the reason it's been beaten down was they've been burning a lot of cash. There's a bit of excitement last quarter initially, because it does look there initially like they were cash flow positive by 6.4 million. So a lot of people just saw that number and went, cash flow positive, 6.4 million. But if you look just above that, government grants and tax incentives was positive 7.5, so it had a lot to do with it. But if you even take that away, they're only cash flow negative by 1.1 million. So that's much better. You can see the 12 months to date, they were burning cash by 14.4 million. So a lot of cash and a lot of staff costs. So a lot of their cash went to staff costs. I have a feeling they are starting to get rid of starting to wean away staff costs and administration costs to decrease costs. So that's one good thing they're doing. So that's all for this part. Part 2, I'm going to look at 3 companies. Centric ICU, it's been a bit of a crazy ride there last week and a half, but they are pretty sure they are cash flow positive. That's why they're being doing good things. Connection, I think that's how I pronounce it, CXC, I believe they are. And Spectre, SP3. So 3 exciting sort of companies here, and I hope you enjoy me for the next video. If you have any questions, leave in the comments. Make sure you subscribe. And again, I'm not a professional advisor, so if you do need professional advice, make sure you speak to a professional. That's all for now. Hope you enjoyed this video. Hope my Blue Yetis worked. Hope my webcams worked. So I don't want to do this again. So see you later.